I think we're at the bottom. So in the last 2 weeks, there's been two announcements that mines are going offline. There's a big mine in China that's operated by one of the biggest battery producers, and so that's between I think it's about 6 to 7% of the global production, and or sorry, it's about 5%, and then there's another one in Australia that's going offline that's about 3%. So when you're seeing supply cuts like that of significant magnitude, that's telling you that we're probably pretty close to the bottom.
Today's discussion focuses on critical minerals. What's next for investors interested in the space? What's next for potential national security concerns as trade wars escalate? And how can investors benefit from the rising demand in critical minerals, lithium in particular? Francis MacDonald joins us today. He is a CEO and director of LIFFT Power, very interesting company with deposits in Canada. Welcome to the show, Francis. Good to see you.
Thanks for having me on, David.
Let's start by talking about why we need lithium today. We know that lithium is used in lithium ion batteries. That's a given. We know that lithium is used for the development of electric vehicles. We know that lithium is needed for the electrification of things overall. But a lot of these things that I've just talked about have seen setbacks after setbacks, rollbacks. The EV industry, for example, has announced, many companies like Mercedes, Audi, BMW, and a lot of others have announced recently that they're scaling back on their EV-only promises by a certain deadline. They were saying last year they're going to have an EV-only fleet by some deadline. Now they're saying, no, they're not doing that. So the industry is looking like it's scaling back on that. Why do we still need lithium in such high demand is my first question.
So I think you hit the nail on the head, is that the biggest demand driver for lithium is EVs. And I think I would take a counter argument to that it's scaling back, because the sentiment that in North America and in Europe, I would say, is that yes, there's a slowdown. But the thing is that North America is only 10% of the EV sales globally. Europe is 20% and China is 60%. And so when you want to look at what's driving the EV market, you really have to look at China. And this year, globally, sales year to date are up 20%. In China, they're up 30%. And so, yes, in North America, sales have gone down. We've seen legacy automakers rolling back some of their plans. But the thing is companies like BYD in China are scaling up and looking to export. So I think that the sentiment in North America, or the negative sentiment, is overblown. And like anything, yes, we have seen sales go down slightly this year. I think we went from something like 30% growth rate last year to 20% growth rate. But I mean, if you've got a market that's growing at 20% compound annual growth in when there's this much negative sentiment, I think that's still very positive in the long run.
Let's flip over to my screen then. Let's talk about some supply chain risks. So lithium is currently mined all over the world. According to National Resources Canada, a government website, Australia is the world's largest producer of lithium by tonnage, followed by Chile and China at number three. Now, China has, of course, as you know, been limiting exports of its rare earth minerals over the last couple of years. Just recently, it limited exporting of antimony, which is a critical rare earth mineral needed for the manufacturing of munitions. I'm just wondering whether or not a potential squeeze from China on lithium, which is a critical mineral for EVs and batteries all around the world, is that going to be a major concern for investors, you think?
Well, I think it poses a geopolitical risk. And within the lithium supply chain, the refining part of the supply chain is dominated by China. And so I think it's about 80 to 85% of the world's lithium gets refined in China. And if they did decide to squeeze everybody on that, they would have the ability to. So it's part of this larger geopolitical chessboard that's out there, and critical minerals in general, is that we want to make sure that in North America, we want to have secure supply chains. And eventually we'll want to have our own refining capacity within North America.
How long would that take, what you just described?
Well, I think right now the Chinese have done a great job of creating the technology and refining the technology, and so the West is really behind in terms of catching up to the Chinese and their ability to pump out lithium chemicals and a lot of other industrial processes as well. So Right now, there are two lithium conversion facilities that have been built in Western Australia by a couple of the world's largest lithium producers, so Albemarle and IGO. And they haven't been able to get up to nameplate capacity and produce what they should be producing at the cost that they should be producing at. It's a difficult chemical process to get down to get to 99.5% purity lithium carbonate. And the Chinese are probably about a decade ahead of the West because they got on this about a decade ago.
This is interesting. I'm going to talk about your company in more detail in just a bit. But flipping back to my screen, and I bring this up because your company is based in Canada, LIFFT Power. So again, world mine production of lithium by country. Canada is number eight, 500 tons of lithium produced in 2022. However, if you look down here, world reserves of lithium by country, Canada is number six at 930,000 tons. The US actually is ahead of Canada at 1 million tons. But I'm not seeing any production here on this table from the US and only 500 tons of production from Canada, given a 930,000 ton reserve. Why such a difference in reserves and actual production between in Canada and the US?
I think it's because that the lithium as a commodity is something that's new. And
Hmm.
this has really started to pick up in 2020. And if you look at EV sales in the 2010s going into 2020, it's kind of like a straight line. And then it does a hockey stick. So it goes where, and that's really been driving the consumption of lithium chemicals. And so in Canada, we have fairly stringent permitting processes. And in general, I'm sure everybody that's following the mining space has seen some of these statistics that on average right now, it takes about 15 years from discovery up until production. And so we're really just 4 years past that big inflection point in demand. So it's really just about getting these projects permitted and into production. And there's been a number of terrific discoveries in Canada in the last 5 years. And so LIFFT Power, obviously, we've made one of these discoveries. Patriot Battery Metals has a great discovery. Frontier Lithium is another one. So we have these lithium deposits out there, but they're working their way through the permitting cycle and getting up into production.
Well, given that lithium is so critical in the agenda of electrification that was proposed by politicians, not even by the private sector, what is the government going to do to incentivize more production of lithium production in Canada and the US?
The government right now is looking at streamlining permitting processes, and so we've been involved in a number of those discussions of how do we put some of the processes in a parallel path rather than a sequential path. So that's an example. The government also has some funding for critical minerals. There's infrastructure funding, and I think that we'll probably end up seeing some more direct funding at some point. But infrastructure is one of the key things for critical minerals and mining in general, is that if you have the infrastructure, then it makes it a lot easier for explorers to go explore. It makes it easier for miners to finance projects. And that's really, I think the two things that governments can do is help with infrastructure and also with timelines.
Can you comment on why the lithium market saw a huge surge between 2021 to late 2022 and then subsequently basically collapsed back down to its pre 2021 surge levels? What happened there?
Yeah, so it goes back to that EV demand that started really kicking in around the end of 2020. And the battery manufacturers were getting orders from car producers. And so BMW calls up the battery manufacturer and says, I need 1 million battery cells. And
Yeah.
the battery producer says, yep, sure, we'll get on that. And then they get off the phone, they turn around and they're like, well, we don't have any of the raw materials
Sure.
to do this. So they
All
started
right.
just buying up every unit of lithium that they could get their hands on. And that's why the price rose so much. Because in an EV, the battery, the amount of lithium is between, let's call it 50 and 80 kilograms of lithium. And at the time, it was trading at $10 a kilogram. So, you're talking about like hundreds of dollars of difference in the raw materials going into the car. So they didn't really care about the price. They were just getting these orders that they needed to fill, and that's really what drove the price up.
Was that
And
partly why car prices skyrocketed during that time? I mean, a lot of it was due to the pandemic, of course, but there was a chip shortage as well. But input costs like lithium went up. Was that another reason?
Yeah, I think it could be. But I think, it was really the EV battery manufacturers stocking up on supplies, and that was the
Mhm.
real driver
Uh,
in the lithium price appreciation.
okay,
And
so this
so
decline in price wasn't caused by a flood in supply. It was just they're done stocking.
so there was supply that was brought online in those couple years. And so it was a combination of supply being online, battery manufacturers having existing stocks, and then also EVs starting to cool off in terms
Mhm.
of the orders coming in.
I see. So ultimately, what's next for investors? I think investors are wondering, well, did they miss the boat? Did they miss a historic opportunity to get in at the bottom here?
Well, I think we're at the bottom, and I've been hearing that a lot in the last little bit. And so in the last 2 weeks, there's been two announcements that mines are going offline. There's a big mine in China that's operated by one of the biggest battery producers, and so that's between I think it's about 6 to 7% of the global production, and or sorry, it's about 5%, and then there's another one in Australia that's going offline that's about 3%. So we've seen these supply cuts, and there's probably more coming. And so when you're seeing supply cuts like that of significant magnitude, that's telling you that we're probably pretty close to the bottom. And at this point, it doesn't make sense to bring any more new supply online just with the pricing. The incentive pricing to build new mines is probably around 20,000 a ton for lithium carbonate. And we're trading at about between 10 and $12,000 a ton right now. So it's a classic commodity cycle. It's always boom and bust. And when there's a lot of excitement and froth, that's probably a good time to be taking some profits. And when everybody's hated it and it's really at the bottom, and it's you see supply going offline and things like that, that's probably a good time to be buying right now.
You told me offline that this is a very hated sector right now. Can you expand on that? What do you mean by that? And second part of the question, I guess this would be a contrarian play by your definition of hated.
Absolutely. So hated, I say that with it's negative sentiment. And so people are saying EV sales are down, there's oversupply of lithium, the price has come off by 80%. And so when you see something like that, people hate the sector. And that's the definition of a contrarian play is when other people hate it, that's when the contrarian is picking up those positions. And I think the big thing here is that the what's driving all of this, the mega trend of electrification is still on track. And when we're seeing 20% growth or compound annual growth in EV sales this year, I mean, it's not like we're seeing, a fall back down to 2% growth rate. I mean, 20% growth rate in a market, like if you can keep that going, and it has been going at that rate, uh, I mean, that's a big trend, and it's going to turn at some point.
Take a look here. So currently we're looking at lithium futures trading at, yeah, like you said, 80% down. What is needed for hypothetically, if we were to create a scenario in which the lithium price spikes back up by the order of 8 times to its then all-time high in late 2022, what would that scenario have to be, Francis?
Well, I think that was a very special situation. And that was a inflection point where we never really needed lithium before in that quantity. And there was a panic of just where's it going to come from. And so in that cycle, we brought on a lot of supply. And so I think we also brought on a lot of swing supply. And when I say that, there's cheaper sources or there's lower quality sources of lithium out there that are more expensive to produce. And this would be minerals like lepidolite. It's a purple mineral with lithium in it. So I don't know if we're going to go back to 80,000 a ton. I mean, if we did, I would be jumping up and down. But I think realistically, there's probably a cap, and we don't need $80,000 a ton as an industry to be making money. If we were sustaining, let's say $20,000 a ton lithium carbonate, I think that a lot of these projects would be making a lot of money.
So the equilibrium price for you would be about 100% increase from current levels, is what you're
Hmm.
saying.
Yeah.
There's different grades, from what I understand. There's different grades of lithium around the world. Can you tell us about what's found in Canada relative to what is found in, let's say, Chile or China?
So there's really two sources of lithium. One is from hard rock, or bedrock is what we have in Canada, and the other is from brines, so salty water. The brines are really concentrated in South America in what's called the Lithium Triangle. So this is an area in the Atacama Desert between Chile, Argentina, and Bolivia. And traditionally, that's where lithium has been produced from. That was the majority of the production up until about a few years ago. But also, lithium comes in a mineral form within rocks. Think of it like a granite, and there's a crystal in that granite that's got a lot of lithium in it, and that's what we mine and process to make battery chemicals. And that's in Canada. We have the hard rock variety, and in general, the hard rock variety is a lot more geographically diverse. And so we see it in Australia, Canada, Brazil, Europe, Africa. And so it gives more geographic, but also geopolitical diversity.
From an industrial application standpoint or point of view, does it make a difference if it's brine or hard rock?
Not really. It's just you process it down into the same thing, which is a battery grade lithium carbonate, and that's what the battery manufacturers use.
Is the market price different for different sources?
No, not for the refined chemical.
I see. Can you make an argument for why investors or the industry may push towards more demand for premium lithium sources like the ones found in Canada?
Well, I think so. Like I said, the geopolitical aspect is important, and also from an ESG perspective, the brines, you're pumping out large amounts of water out of the ground. And so if there's communities around, you're affecting water tables and things like that. So a hard rock lithium mine is really, it's just a hole in the ground that you'll eventually fill in. And so it can be more attractive in some regards.
When can we expect Canada to start producing at, well, I mean, let's just take China, for example, 19,000 tons of lithium produced in 2022. They have 2 million tons of lithium content in reserves. Canada has just under a million. So when can we expect Canada to produce at half of China's volume, which is, half of 19,000, 8,000 tons? Currently, Canada has produced in 2022 only 500, which is a far cry off. When can we start catching up to other countries is my question.
I think you will see Canada catching up. And like I was saying before, it's just working itself through the permitting cycle. So in Canada, I would say probably 6 years is around the minimum to go from a discovery up until production. And so we really saw lithium exploration really kick off in 2021, 2022. So I would say near the end of this decade, we'll see Canada really starting to blossom as a lithium producer. And we have some of the most prospective geology in the world for lithium deposits. Right now, Australia is the biggest producer, and we have much more of the same geology here. So I think that eventually Canada could be one of the larger producers, or probably has some of the larger resources. And it'll all come down to infrastructure at the end of the day, where those deposits are located.
Well, tell us about the deposits at LIFT. So give us a sense of the scale, the size, and any latest drill results that you could report to us.
Sure. So the main assets in LIFT that we're focusing on are our Yellowknife project, which is outside the city of Yellowknife in the Northwest Territories. And we are just outside of town, so 20 minutes by paved highway to get to some of the bigger deposits. We have been drilling these in the last year. We drilled about 50,000 meters of core, and that's all going into a maiden resource estimate that should be out around the 1st of October.
Well, having premium deposits is one thing, but driving shareholder value is another. So how does your company plan on delivering just that, which is higher shareholder value?
Yeah, well, I think right now it's about showing that we have a world-class asset, and we're on the cusp of that. And that's going to be, like I said, in October. And then after that, it's really going into economic studies and showing that we can get this out of the ground and getting into the permitting process as well. So how do we drive shareholder value? It's defining the resource, showing it's economic, really pushing it towards production. And that will be, if we get to production, that's obviously going to, make people money because we'll be producing something and selling it. And then obviously there's always the option of a takeout at some point as well.
Yeah, let's talk about that option. How dedicated are you to producing versus a takeout?
I think that we are going to push this project as far as we can, and it's all about de-risking things. So we are going to do all of the steps to get up to production. And if someone comes along with an offer at the right time that looks good, it would be crazy not to look at it. But if it's not the right offer and it's not the right time, then we'll just keep pushing it forward. And then we wake up one day and the mine's permitted and we've got the cash in the bank, and then, there we go. What else is there to do?
Going back to the politics and the geopolitical side, so Canada in 2022 blocked three Chinese firms to divest its Canadian lithium operations. Under Trudeau recently, Canada is blocking Chinese rare earths exports. And I guess the question is, what are they going to do next? So yes, there is a trade war aspect. They're cutting off Chinese supply. Are they immediately switching to Canadian production right away? Are they providing you and other Canadian companies incentives to start producing right away? I mean, the lithium in Canada has to come from somewhere.
Yeah, no, that's a good question. And I think it's unfortunate that Canada is blocking Chinese companies from transacting on Canadian listed companies because that's one of the big sources of capital out there globally for critical minerals, especially, but also for mining projects in general. And I think that if the Canadian government is blocking these things, that it might be a good idea to support the companies more. Because if you take out one of the largest buyers in the market, it's not good for the industry in general. And Canada has been a powerhouse in the natural resource sector for a long time, but I think that it's slowly declining at this point.
Well, we have the Inflation Reduction Act coming out from the US, which really just supports green initiatives and the electrification of the industry. How do you expect that to boost demand?
Yeah, I mean, I think that through the IRA, this is quite a substantial funding scheme that critical minerals projects can tap. And the loans that are available through the IRA, I think we saw Thacker Pass. I don't know the number specifically, but it was in the billions of dollars that they got loans from, I think from the Department of Energy. So that's, you really see the US government stepping up here and providing funding options for the critical mineral supply chain. And I think it would be helpful if the Canadian government was coming up with a similar scheme.
Speaking of incentives, we can talk about the government incentives all we want, but ultimately we need to find customers for lithium, and we know that's EV companies. So I think investors would like to know or are wondering whether or not you're thinking of partnerships with EV producer or manufacturers directly. I mean, is Elon Musk going to write you a check to just buy out your mine, you think?
Yeah, let's see. Maybe you'll see this interview and he'll put out the checkbook.
Does that
uh,
make sense to you though, that car
sure.
companies are vertically integrated with the supply chain?
Yep. And Tesla's a good example. So Tesla, I think is building a lithium refinery in Texas, and so I think that part of the plan is to have a fully integrated car company that also is a lithium producer. So in terms of partnerships, obviously we're out there talking to everybody, and there's a number of conversations happening throughout the supply chain. I mean, we've seen some of the car manufacturers like Ford, BMW, Volkswagen. They're all looking at critical minerals projects and especially offtake from these of the battery materials that go into the batteries. So we'll see how that all plays out. They've kind of cooled, at least the North American car manufacturers have cooled a little bit. But we'll see how that plays out in the next years. So they are really looking to secure supply, though.
Are there any potential partnerships you're considering that you can discuss publicly?
Not really at this time.
Okay. Suppose you don't get a buyout offer immediately, but the country, the industry is ready to move forward and ask companies like yourself for lithium. What steps will you take to ensure that you will be ready to produce lithium once the demand kicks off again?
I think the biggest thing is permitting. And so really making sure that you've ticked all the boxes because you can get into a quagmire pretty quickly where they might say, oh, you didn't collect enough data here, go collect this. It could delay the project by 5 years. So that's the biggest thing is getting on the permitting track early and also making sure that you have all the T's crossed and the I's dotted.
And then finally, I think investors would like to understand who the management team is. So can you give us a bit of um, background on your career and how you've transitioned from where you started, which I believe was doing greenfield exploration for some really large mining companies, to where you currently are?
Sure, yeah. So my background is in exploration geology, and I was the field guy for about 10 years. I was working for Newmont, which is the largest gold producer, and that was in the Canadian Arctic and then across Africa. That was all early stage exploration projects, mainly for gold, but a bit for copper as well. And then in 2016, I went entrepreneurial and I co-founded a company with three other geologists that I'd worked with in my career. That company is called Kenorland Minerals. And we were acquiring mineral claims and then convincing other companies to spend their money on it. So very low risk way to play the mineral exploration space. And we did that pretty well. We brought in about $100 million in funding from companies like Barrick, Newmont, Freeport-McMoRan, Sumitomo from Japan, Centerra, and made a greenfields gold discovery in Quebec, which was in a partnership with Sumitomo. And so in that company in Kenorland, we decided at some point that we should look at battery minerals or battery metals. And we were focused on Canada. And in Canada, nickel and lithium made sense. So we dove into those two commodities. We staked a lot of ground in Quebec around the Whabouchi deposit, which was at the time Canada's largest lithium resource. And eventually we spun that out into LIFFT Power. And at some point, it made sense for me to become the CEO of that company.
And so why did you ultimately decide on settling in Canada and not in Australia, the world's largest lithium producer, or Chile, for example?
Yeah, so we were focused in Canada as a company because we were all Canadian and that was where our expertise lied. But at the same time, like I was saying before, Canada has very similar geology to Australia. And also the Whabouchi deposit, this was in a company called Nemaska Lithium previously. And at the top of, I think it was 2 cycles ago, they hit about a $2 billion valuation. And that was all based off of 50,000 meters of drilling that they'd done. And this is one of the main reasons that I had started looking at lithium was the amount of drilling that you needed was almost an order of magnitude less to get to an economic feasibility study compared to gold or copper deposits in Canada. So that's why we started looking in lithium and then why we were in Canada.
I'm just curious because you've worked in both the precious metals and now the critical metals, metal space. Any differences in challenges rather, between exploration for gold versus exploration for lithium?
I wouldn't say from a technical perspective that they're that much different. So a lot of my career was focused on orogenic gold deposits, which are basically quartz veins. And the lithium pegmatites are pretty much similar to quartz veins. You know, they're long vein-like structures that are a lot longer than they are wide. And so similar principles. I would say the main difference between lithium gold is just the volatility in the market. And we saw a 800% increase in lithium pricing. That would be like gold going from 2,000 to $16,000 an ounce. So that's the main difference, I think, is it's just it's been very volatile. But in volatility, there's lots of opportunity.
Greenfield exploration for a big company like Newmont versus greenfield exploration for basically for yourself in a junior. Any pros and cons?
I would say doing it for myself and ourselves in these different companies, it's there's a lot less bureaucracy and decisions can be made a lot quicker. So that allows you to be very nimble. And to give you an example of this, when I was working at a project in Nunavut for Newmont, there was a wide open greenstone belt, and greenstone belts are very productive for gold deposits, for copper deposits. And this was right beside our operations. And it took us about a year to get the approval to go out and stake that greenstone belt. Versus in Kenorland Minerals and LIFFT Power, I mean, we make these decisions within, a few hours.
Well, congratulations on your success so far. Where can we follow your work and learn more about LIFFT Power?
I think the website is obviously a good place to go. So it's li-ft.com. And you can follow us on LinkedIn and Twitter as well. I think those are the big platforms that we're using.
Okay, so LIFFT Power. I'll put the tickers. Well, it's LIFFT on the TSXV. I'll put the description link to the website in the description down below. So make sure to check out LIFFT Power and do your diligence in that company. There. Thank you for spending time with us, Francis. I appreciate it.
Thanks for having me on the show.
Thank you for watching. Don't forget to like and subscribe.